terms of consumer attitudes, we asked folks, how likely are you to do the following on slide 9? Go see a movie theater, attend a live concert, attend a live sporting event. Now this is going to ebb and flow with news flow, case count, and things like that. But if you go to slide 10 and just look at the overall shift, restaurants and live concerts were among the highest change in terms of attitudes towards attending these events post and pre-COVID. On slide 11 and 12, we have consumer expenditures where we look at entertainment, the data that or the amount of money that people spend on out-of-home entertainment and in-home entertainment. I think it's important to note that it is cyclical. While entertainment is largely viewed as defensive, if after-tax incomes go down, that the percentage of that after-tax income that gets spent on discretionary purchases also goes down. So this isn't this unlimited market. That being said, stimulus has definitely come in and helped offset that, as well as forbearance programs, at least in the short term. And Neil, I know we talked about this before, but I'm on this OTT services adoption by household income slide. And I think this kind of speaks to the target market of these advertising-based services like a Hulu or Pluto or Tubi, and how it is over-indexed to lower-income households. And this kind of ties together with the consumption expenditure slide that I showed previously. But I don't know if you wanted to comment on that, because I know it's something we talked about previously.
I've been noting a bunch of things you've been saying, so we're going to come back.
Yeah, let's go.
A bunch of those things in just a second. But I did say that chart that you had on, to an economist, that says one thing clearly: it's the difference between inferior and superior goods.
Yep.
So take a look at this. Things which rise as you have more income, that's called a superior good. Things which decline, those are inferior goods. So when you're dealing with higher profit margins, more affluent consumers, also over time, assuming that everyone's getting a little bit more affluent, right? You don't want to be in the inferior good business, unless you're dealing with the Irish famine or something, right? And so you see here, right, where all your money is to be made, right? It's on the fees and admission side. And that's, well, you can't do anything outside anymore on fees and admissions. I guess that does, contain that. But obviously the huge money is all these over-the-top, subscription services, right? As opposed to the audio and visual equipment, more and more people, I guess, are just watching content on their personal computer. Is that correct?
Yeah, I mean that's especially in this environment, it frees up. It frees up a lot of wallet share, and also allows people to explore more options, right? What we've seen, at least in the OTT landscape, which is the streaming landscape, is that all these legacy media companies have just been launching a ton of streaming services. So while Netflix was the only game in town for many years, that's slowly changing. And so all of a sudden, you're not spending as much money on out-of-home entertainment, you're locked up in the house, and so you have more time to explore and spend time with additional services that are currently being offered. And so that's definitely something that we've seen across the space.